What's going on, guys? In this video, we're going to talk about the reason why 90% of day traders fail, right? It could be closer to 95, 97. I'm almost, pretty confident to say that 98% of the average retail trader that is waking up, trading the markets on a weekly basis is more than likely a non-profitable and losing trader. But let's get into some of the reasons as to why they potentially are a losing or non-consistent trader, and what exactly is the other 5%, 10%, 2% of winning traders actually doing. So one thing that I want to get into, and I think that is very common in a lot of retail traders, and I know this firsthand just based on the videos that I make, the videos that I produce, the content that I put out there. It's clear to me that the majority of the search traffic, the majority of people and traders searching and seeking for information based on trading or day trading or futures trading or whatever, has to do with people looking for strategies, looking for indicators, looking for live trading or recaps, or wanting to see someone else's trade so they can kind of correlate that and mimic that particular situation. Well, if trading was purely just technicals, if it was just based on technical analysis and it's just based on strategies and it's 100% technical, why would 90% plus traders still be having trouble? If you can learn a strategy and you can implement a strategy and you can read candlesticks and read price action, why are you still inconsistent? Why are you still having trouble passing prop firms? Why are you having trouble growing a small account? Because if it was purely technicals, I think anyone can, who is a hard worker, a normal human being with the ability to comprehend and the ability to study and the ability to put in the time and the ability to work hard, can definitely learn technical analysis. So a lot of times traders will get focused on wanting to spend so much countless time on learning strategies and where should I put my stop loss and where should I put my take profit. Those things are important, but it's not the end all and the be all. It's not the key. That's not the success route that you want to invest a lot of your time into. And the reason why a lot of the 90% of traders are unsuccessful is not because they don't understand technical analysis. It's not because they don't have a specific trading plan or strategy. It's because they haven't yet learned how to deal with emotions. They haven't yet learned how to deal and handle losing. They haven't yet learned how to deal and manage their capital. The only way that you can stay in this business is by having money to trade. So the number one rule in trading is to protect your money and not lose money. Now, when someone thinks about that statement that I just made about not losing any money, that doesn't mean that we're talking about losing a trade here or having a losing day or having a losing week. What it means is you all start off with one block of money, right? Whether you're trading for a prop firm and you have $2,000 worth of drawdown before you blow that account, or whether you're trading a personal account and you've loaded up $5,000 into that personal account, you all have a starting block of money. So the whole idea is to protect that starting block of money. That block of money can definitely fluctuate and go up and go down, but we never want to run it all the way to zero. And when a trader in the 90% doesn't understand how to handle their own emotions and handle their drawdown and handle their losing streaks, or their losing days or losing weeks, what tends to happen is they make a bunch of irrational decisions that allow them to dissipate that starting block of money. Okay. Now, not understanding proper risk management and not understanding how much money you should be losing on a day in and day out basis is some of the knowledge that the 2%, the 5%, the 10% of winning traders understand. They've taken enough trades on their strategy to understand how many trades it's going to take them when they go into a series of drawdown or when they go into a cold spell that it's going to take for them to get out of the trade. And instead of looking at each individual loss as an L, overall, they look at it as just a stepping stone to get to the end of that block of trades to get them into that profitability territory. So depending on your strategy and depending on your edge, you could have a strategy that wins at 20 or 30 or 40% and still be profitable after a series of 100 trades. But if you don't understand how many trades that it's going to necessarily take to get into profitability during the path, during the course, right? During that transition from going from trade 1 to trade 100, your wheels start to fall off the wagon. And what tends to happen is a lot of traders, they have some success and they see that P&L start to rise, and then they hit a little bit of a cold streak and the P&L starts to go down. And it's when that P&L starts to go down, it's that the work that they need to put into the emotional side of their psychology and their trading and education needs to be lifted, and not the technical part of their trading journey and their trading plan. So most times when people have an equity curve that kind of goes up and then it flatlines and then it goes down a little bit, instead of investing your time into journaling and your time into mindset and psychology and learning how to manage emotions and learning how to handle losing and handle correct position sizing, most traders, when they're on that downwards trajectory, start looking for other technical reasons how they can grow and pick that P&L back up. So what that means is when they're on that downward path, instead of focusing on some of the mistakes that they are making psychologically, they're focused on the next strategy. They're focused on the next trading Discord community or room. They're focused on trying to learn from another trader. They're focused on trying to mimic or copycat someone else's trades to get them back in that particular situation. And it's a lot of times, traders will bounce around between strategies and entries, hoping to bring that P&L and that equity curve back higher. However, if they never spent the work understanding how to preserve the capital in the first place, psychologically, it's not going to make any sense, because although a new trading strategy, a new indicator, some kind of new, learning on the technical analysis side can definitely help you win more trades. It's just like adding another tool to your tool belt. It's not going to help you when that next strategy or entry or particular, way of technical analysis, training, supply and demand, or whatever you're using to trade, when that goes into a cold streak, you don't know how to manage that drawdown either. So it doesn't really matter what technical analogy or what technical analysis, factor that you're using. If you never really understand risk management, you never really understand how to deal with trading in a block, in a series of 100 trades, a series of 200 trades, a series of 50 trades, you can never really know and understand what to work on. So I hope this is making sense. And the moral of the story is that, the 10% of consistent traders and traders who are actually taking payouts and depositing money into their bank and putting money into their back pocket are ones who have either A, been at this for a very long time, so they've hit the ups and they've hit the downs, they've hit rock bottom, and they've understood what they need to actually do. Or it's people who spend a lot of time in the beginning learning how to develop that emotional control. Because like I said in the beginning of this video, if being successful just meant you needed the right trading concept or the right strategy or indicator or particular, alert service or algorithm, or some kind of trading bot or whatever the hell's out there right now, if it was purely that simple, then the odds and the statistics would be different. It would be more closer to a 10% failure rate when it comes to day trading and a 90% success rate, because it's the 90% of people who are actually putting in countless hours of studying charts and back testing and taking trades and learning new strategies and learning new concepts. It's 90% of traders who are actually investing all of their time into that. and spending little to no time on the emotional side of things. I'm not saying that trading is all emotional and that that's all you should be focusing on, but there comes a point in time where you've learned enough technical analysis and you've learned enough strategy entries and you've learned enough about candlesticks and you've seen enough price action on the screen. That's all fine. You need to understand those basics and those, basic concepts and fundamentals. But there comes a point in time where the unsuccessful trader and the successful trader have shifted their energy into what is more of the priority focus. And that priority focus definitely needs to be on the managing that initial block of starting capital that you do have. How do you crawl out of $1,000 drawdown? How do you crawl out of, having 2 or 3 consecutive down days? How do you handle a losing trade right off the bell? How does that affect your psychology? How does it affect your psychology when you're, winning 1, 2, 3 trades in a row, oversize and kill those profits? How do you manage that feeling that rushes through you at that given time? And the majority of traders don't understand how to manage that. For example, today is a good little indicator and good teaching lesson. Today is December the 13th, 2023. We had FOMC. Majority of retail traders know that price action is choppy. They know that price action is stagnant. They know that once the meeting notes come out and Jerome Powell starts to talk, that the market goes crazy one way or the other. You know that already, but yet you still show up to trade the market open. That first move right off the gate, that second move right off the gate. In the back of your minds, you were expecting something to be different today, and yet you still trade. Where the 2%, 5%, 10% of successful traders understand that the market's going to be choppy. They understand that we can get some high volatility. They understand that there can be low volume off the open. They understand that, and instead of racing to take trades, they're more selective on the trades that they're taking, and or sitting out altogether, and or waiting for the meeting notes to take place and then see which side the market wants to break out to. But yet the other 90% of traders want to try to make a couple of trades before the meeting notes. They want to make their money before anything happens and call it quits. And what tends to happen to the 90% is the 90% tends to lose before the true direction of the market even has shown its face. Now, is that because you don't understand technical analysis, or is that because of something on the emotional side that made you trigger to want to trade? There's a difference between being a smart trader and a hardworking trader, a losing trader and a profitable trader. Where do you want to fall? Do you want to fall into a trader that just tries to trade every trick and hat in the book? Or do you want to be a trader who's more educated, who can stick around for 100 trades, stick around for 200 trades, 500 trades, the next 12 months, 24 months, 36 months? Think about that for a second. If you enjoyed this video, make sure to like, comment, and subscribe. I'll see all of you guys on the inside of Evolution Traders who decide to join. For everyone else, to much success. Continue to be a smart, disciplined trader. I'll catch you guys all next time.